All right. So with that being said, I would like to get started with getting your finances in order. So this group is mainly geared towards real estate investing, but I figured we should at least touch base on getting your financing in order. Without this step completed, there isn't much left to invest, if we being honest. So this should be the beginning of where you need to start. It's early in the year too, so it's the perfect time to begin as far as, getting that part done. I'm big into personal finance, and like in that area, that space, I spend hours every single week studying this stuff. So I want to share just some of the info with you, and I hope that you take action with the information. I'm going to show you some strategies and like that I use and how you can manage your cash flow as well. But before we even do that, I just want to have my disclaimer. This presentation is for your enjoyment purposes only, and anything you hear today should not be taken as financial advice. So the moral of the story, as you see on there, is to do your own research. All right. So why did I even want to talk about this? In my research, what I found was that about 63% of the adult population in the US live paycheck to paycheck. 63% live paycheck to paycheck. And that was a study done by a Career Builder. In addition, I also found that 34% of adults have difficulty covering your basic expenses. So we're talking like food, rent, mortgage, car payments, medical expenses, student loans, things like that. 34% of people have trouble making those payments. And that was from a study done by Forbes. So if you're part of that number, I want to help you avoid that going forward by just giving you some practical strategies you can employ right away. So the first one is understanding your cash flow is very important when it comes to financial stability, right? Cash flow just refers to the movement of money in and out of your accounts. So the income you have coming in and the expenses you have going out. I understand that this may be a challenge, especially in some businesses that are in some careers where you're commission based. So you have essentially a regular income. You don't have like a constant salary where you know how much you're going to get paid every 2 weeks or every month. For example, like my job, my real estate income, it can be unpredictable because I'm commission-based earnings, and I have various closing time frames or timelines. Sometimes I go months without even having a closing, if we being honest. But regardless of whether you have regular or irregular income coming in, at the very least, you need to be tracking your income and expenses. Like I use QuickBooks for my business part of it, like the cash flow of my business. I use QuickBooks for that. But there are other softwares or things out there like Wave Accounting. I don't know if y'all ever heard of that, but you can use that. That's free. They actually have a free feature for that. You can use that for your business or just a good old-fashioned spreadsheet. Like I use an Excel spreadsheet for my personal cash flow, calculating the income I have coming in personal and expenses from the personal. So what I mean here is like the mortgage on my house. That's personal. That's not a business expense. So I track two different things. I have the cash flow from my actual real estate agent business and then my personal stuff. So what's in it for you? Well, tracking your cash flow will help you identify areas for improvement. You may be spending too much on eating out, from the personal side of things, or maybe in your business, you may be spending too much on marketing, but you don't know this stuff unless you're tracking it. So that's the first thing. You have to understand your cash flow by tracking it. I heard this once before, and it's so true. It says, I don't know who says it's a quote, but whatever gets measured gets managed. So if you're tracking this stuff, you're gonna be able to be in position to manage it. So that's the first thing, understanding your cash flow. And a lot of people don't do this, and I'm positive on this. They just spend whatever comes in, they just spend it. And then they left at the end of the month trying to struggle to pay for, car note and house groceries, things like that we just talked about. I forgot. I think it was 34% of people. All right, next, this is Wave Accounting. This is the thing I talked to y'all about. Like I said, there is a free version out there, but you can check this out. If you want something and you don't want to use like just a basic Excel spreadsheet, with this, you tie it directly to your account. And once you have any type of credit or debit, you just simply classify it. What it was advertised, or it was office supplies, whatever. Right now, I'm talking about from the business aspect, but you could do it from personal as well. Any questions on that before we move forward? I know we got some stuff in the chat because I see it, but I don't know if that's questions or not.
No.
No, no questions in there, bro.
Next part, creating a budget. It sounds so simple, yet a lot of people don't even do it. I don't know why, but a budget is very, very, very important. It's a vital tool for just managing your cash flow effectively. I use an Excel spreadsheet for this too, free. You know what I'm saying? It's perfectly fine. We when I'm going through this, I just think about it like you can use an Excel spreadsheet or you could use old-fashioned pen and paper, whatever works best for you. But you need to be doing it at the hold on 1 second. Okay, there we go. I was about to mute somebody. But yeah, you need to be doing it. So what I would start with is you could take like your average monthly income to help determine, how much you have from the income side of things for budgeting purposes. If you're salary based, then it's significantly easier to do this. But I say take your oops, I made a mistake and hit Tiffany. If you're commission based like myself, then you'll want to take the average. But if you're salary based, then it'd be way easier to identify how much income you have coming in. Then you want to identify what's your recurring expenses and write all that down or input it into a spreadsheet. What I'm talking about here is just like housing, transportation, utilities, groceries, insurance, taxes, that kind of stuff. You could also review like past bank and credit card statements to get those amounts if you don't know them offhand. Anybody out there actually doing a budgeting?
Yeah, I budget.
What you use?
I use Mint,
You use what?
Mint.com.
I thought
It's
they don't have it no more.
well, no, I still use it because through not QuickBooks, but QuickBooks and TurboTax and whatnot.
Okay, I thought Mint went away and it's called something else now. They bought some. I don't know. I thought a company bought them out.
It's Mint, and also I use well
Which one you cut out? My bad.
Mint and Empower.
Okay, I never heard of those, but that's good. A lot of people don't budget at all, so that's good that you're doing something.
Yeah, I've been doing this for a minute.
This right here is how I do my personal. Like I said, I have the cash flow statement and stuff with QuickBooks for my business, but when it comes to personal, I just use this right here. It's simple. Like you don't overthink this stuff. It's so simple. You just need to be doing it. As you can see, I don't know if y'all can see it, but it's just your basic stuff like your rent or your mortgage, car note, water, gas, trash, whatever expenses you normally have. Just go ahead and input that in there. You can create this easily. Not hard to do. Like it doesn't have to be fancy. Like we say with real estate investing in this group, just start. You gotta start somewhere. And I'm telling you about first of all, tracking your cash flow and then creating some kind of budget. It will help you identify, money that you can save to be able to invest. So if you don't have a lot of cash flow at the end of the month, try implement something like this to help you identify, because you may identify like you may be spending too much money on certain areas you didn't even know you were spending, especially when it comes to like subscriptions and things like that. So just keep that in mind. All right, next one, emergency fund and income streams. Obviously, we all know that emergency fund is very important. It's going to be like that safety net, that financial safety net, when unexpected situations happen, like market turn downs or downturns, I should say, and personal emergencies, things like that. It also can help you avoid high interest debt, such as credit card debt, in the event of emergency. Most times, people have, the emergency come up, they have to go ahead and put it on a credit card. Whether you pay it off or not, each month, that's going to determine how much interest you're going to owe. So just have some kind of emergency fund in the event, things like that do happen. I like to set aside 6 months of my living expenses, but it's going to be your decision on what you feel you need. Obviously, if you're not tracking your expenses, then you don't know what 6 months is. So that's something you need to, like I said, we're building on everything. So you need to know what your expenses are, so that way you can save X amount of months in that. So I would say it's up to you, to save whatever you want to save, but I recommend at least doing 3 months. 3 to 6 months is what I usually see people do. And you want to have it in a liquid and easily accessible account. So like a savings account, things like that. Don't overthink it though. Additional income streams. Let's talk about that. I can't stress this enough, how important it is to have additional income streams coming in and not being fully reliant on one thing. Like we witnessed that in what it was, 2019, 2020, whenever we had layoffs and stuff, like you relying on one person, then you're gonna be screwed. Obviously our path to additional income streams is likely gonna be in the form of real estate or rental real estate. However, it doesn't have to be limited to real estate. You can identify areas you're passionate about and things and then figure out a way to generate income from it. Like for example, I have income streams outside of my rental real estate and outside of my real estate agency. Like I generate income from books that I sell and from, podcasts coming soon. But I got the podcast out, but eventually we're gonna generate some revenue from it. But right now, I'm focusing on the books, the courses, things like that. So whatever it is that you're passionate about, that you're good at, go ahead and identify a way you can make money from it. And if you want to check out my offerings, you can definitely check out gotincomestreams.com. That's gotincomestreams.com in the Financial Flows podcast. All right, debt management. Let's talk about this. If we talked about it before, I believe a few months ago, but if you have excessive debt and just high interest rate credit cards, you have to identify ways to manage that debt. Otherwise, that interest is going to eat you alive. We talked about velocity banking. I did a presentation on it a few months back. Please go back and watch it if you haven't heard of it, or if you haven't watched it. Please go back. It's a proven strategy to eliminating debt fast. Proven. I've been doing it since 2018. Check that out. It's on my YouTube channel. If you want to go watch the video, it's Cousin Sales LA is the YouTube channel. I said it earlier, but what gets measured gets managed. So if you're tracking your expenses, you'll likely end up not overextending yourself on credit if the money isn't there. This one right here is a game changer for me. It's basically a framework that I use to help me budget and manage my cash flow. And I started applying this in 2020 and literally changed my life financially. Every check essentially that I earn, or every check that you earn, it should be allocated for a specific purpose. That purpose could be operating expenses, profit, investing, taxes, etc. And if you know what's coming next, if you can see by the title of the book or a piece of the book, is profit first. If you haven't read this, it's a game changer. Definitely need to add this to your repertoire of book list for this year, especially if you own a business. This is a game changer. It was for me when I read it. I read it a few times, actually. But the book basically challenges the traditional formula of sales minus expenses equals profit, as you see up there. And it offers a new approach that prioritizes profit from the start. With the old formula, the first one up there, you're basically paying yourself last on whatever is left, if something is left. The profit first formula, which is sales minus profit equals expenses, the key idea basically is that profit should be allocated first before any expenses are taken into account. I know it seems weird, but bear with me. By implementing this system, you can ensure that your profitability is a priority and not an afterthought. And in the book, he called it, like, think about it. If you're going to eat food, right? If you're going to eat dinner and you had a big plate and you will fill your plate up because you got enough plate. I mean, you got a big enough plate to fit a lot of food. So you'll fit a lot of food on there. However, if you had small plates, you'll probably, eat what's on the small plate. You'll fill a plate up with less food because it's, how can I explain this? I guess the best way to say it is, let's talk about it from a business aspect. If you're making money and all your money is going into one account, then if something comes up where you want to take a vacation or you want to buy this new tool for your business, you're going to look at that account. You're going to have all this money in there. So it's very easy to say, oh, yeah, I got it because I got all the money. You see all the money in here, but you're not accounting for things like taxes. That's a big one at the end of the year. When people spend, their money and they don't have enough set aside for taxes. I'm talking to business owners right now. But although this book is geared primarily to business owners, but you can do the same thing with your personal finances. This is what I do. So like every single commission check that I get, and it took me a while to get here, but every single check that I get, that's how I allocate it. So I have 4 different accounts. Well, I have 5 different accounts. The 5th one that's not mentioned here is the income account. That's where all the money come into. So I cash the check, the commission check, I put it into this one account, and then I divvy up the check. Like let's say it's $1,000, $400 is gonna go in my operating expense account. This is gonna take care of like my traditional expenses, like whatever, marketing, things like that, salary, all that's gonna come out of here. Oh, I'm sorry, I got my own marketing. Operating expenses would be like my salary, because I do pay myself a salary, S-Corp. But anything related to the business outside of marketing. 10% to marketing, 20% to taxes, and 30% to profit. This profit one is key because I'm taking this off the top. So this profit, basically, any money that comes here, I set it aside and then I invested in real estate or I invested in something. That's my money. That's my profit. I don't put it back into the business. That's my money I take off the top. So whenever something happens in the business, I'm only looking at this account to see if I got enough money to pay for the things. As opposed to if I had 100% of the money sitting in one account, then I got the money for it. That's what I was saying in my head. When in actuality, I'm not keeping in mind these kind of things. So that's why it's key to kind of like, that's the whole purpose of the book. In the book, he talks about like starting off small where you may take 1% until you get comfortable with the numbers to where you can build yourself up to wherever you think is, good for you. And I'm just realizing y'all probably can't even see this. Can y'all see this right here? No, huh? profit
We can
30%?
we can see the pie graph. We just can't see the 30. But
Okay,
40
I just
minus
realized I'm looking at
100
my
minus
screen.
40 minus 20 minus 10 equals 30. So you good, bro?
Yeah, so it took me a while to build up to the profit 30%. Yeah, the 30% is underneath the word profit, but it took me a while to get there. But what I'm saying is just read the book. It's definitely worth it, and you'll figure out what works for you. And this way it'll keep, you'll be taking your profit off the top instead of hoping that you have some money left over at the end of the year. Definitely a recommended read. And you don't have to just be a business owner to read this and get the gems from it. All right, for retirement. So I'm not a financial advisor, and we're almost done, by the way. So please bring your questions. But I'm not a financial advisor. But the earlier you start to put money aside for retirement, the better, because of compounded interest. We all should know that by now. You have options such as the IRA and 401k, just depending on if you're self-employed or if you have an employer. You could do some other things like the solo 401k, self-directed IRA. There's a bunch of different things. Just do your own research and figure out what works best for you and your individual situation. For my full-time entrepreneurs, depending on how you structure it, it can be tax deduction. It can be a tax deduction to your business. That's how I have it in mind, the contributions. I feel bad when I see elderly people like still working because they have to and not because they want to. That just means that they didn't have their retirement stuff in order. So please, please, please take this serious and start putting some money aside for when you do get older. You just want to make sure that you're not working during your retirement years. Retirement years, you're supposed to be, is what they say, you're supposed to be enjoying life, with all the work and the sweat equity you put in during those years. But yeah, set some money aside for retirement. So this one right here, if you don't take anything else away from today, you must comprehend this one because it applies to every single one of y'all on this call. This one thing alone will change the amount of money you actually get to keep. But remember, it's not about how much money we make, it's about how much money we keep. So on the screen, and I'm seeing y'all can't see the bottom all the way, but I'll go through it real quick. Here's why it's better to own a small business, a business in general. So let's start with the left person. So let's say an employee and a business owner, they both make $1,000 a month. Excuse me, it's 1,000. I know it's low, but it's just for illustration purposes. All right, so the employee side, let's talk about that first. The employee, they pay, taxes of 20%. The government, they're going to take their money right off the top. So they're going to take this before it even hits their bank account, right? So their bank account is going to see $800. That's what their check is going to be. And then they have expenses of $750. So that could be car note, mortgage, rent, whatever. I know that that's oversimplified. But at the end of the day, they get the $800, they pay their expenses of $750, and they're left with $50 in cash flow, and they pay taxes of $200 because that was the 20% that they took right off the top, the government. All right, as opposed to the business owner who has those same expenses, but now the business owner can run those expenses through the business. And so they're left with $250 in cash flow. And then they pay their taxes. 20% on the 250 is $50. So they're left with I'm sorry, I said cash flow up here. I meant $200 in cash flow is what they're left with after their expenses are paid and taxes are paid. So you can clearly see here how the business owner actually takes more home in cash flow and pays less in tax because they can funnel those same expenses through the business as opposed to the employee who their taxes are taken right off the top before they even hit their paycheck. Before they even hit their bank account. So that's why it's important to own a small business, and you can run things like your car, your phone, office supplies, etc. through the business. I'm not a CPA, but I'm positive the shit works 100%. You definitely want to talk to your CPA if you're confused, but just know, you can run legal expenses that you would normally pay for out of pocket. You can run that through the business because businesses are taxed after expenses as opposed to the employee who is taxed right at the beginning. And there's nothing you can do about it. Any questions on this? And I'm not even talking about like putting your kids on payroll and things like that and how that can significantly reduce your taxes. That's more, this is the basic of the basic. Just trying to convey to you all that, owning a business and running your expenses through the business, your normal expenses that you would normally pay for, how that impacts your bottom line, how it will save you in the amount of taxes you pay, and you will get to keep more of your income. Hard-earned money. Any questions before we switch? All right, and last thing, I believe this last thing, is estate planning. Save this one for last because we all have an expiration day and expiration date, and we don't know when that will come. Everyone on this call at least should have a will. We talked about that a bunch at this point. Just to quickly go over it, a will, if you have a will or if you don't have a will, you're still going to go through probate court for the judge to disseminate the order that you left, what you left in your will, so they can, basically the judge is going to look at all your stuff. They're going to get into all your business, and you're basically leaving it up to them to determine how your assets will be divided up. You're leaving it up to the judge. Every state is going to have different laws on who gets what, but your family will have to pay those probate court fees. Can't get around it. So that's with a will or without a will. So at the very least, you should have a will, because at least you're saying exactly what you want to happen once you pass. Without a will, you're just leaving it up to the judge to figure it out. And even with a will, they could contest your will, is what they call it, where people could say, "Oh, that's not, that's not his handwriting or whatever." They could try to contest it. All right, so the next step would be the trust. So you have the will, which says how you want things to go, but then you get a trust, because that's going to skip the probate court altogether. So the judge is not going to get in your business, because however you say you want your things to happen, or when you pass, it's going to happen. So it's less money in fees that your estate has to pay, because you're skipping probate court altogether. And the court doesn't get into your business. So if you say you want your son to have this property, the property goes straight to your son when you pass, because you did all your paperwork correctly and had this in place, as opposed to letting the judge figure out, how they thought you wanted to do it and with fees involved. So definitely do that like sooner rather than later, because just because you're young doesn't mean you're gonna, live to see X amount, whatever. We all have our day. We never know what's gonna come. So go ahead and get that together. And it's not expensive. I want to say I paid total for the will, the trust, the financial power of attorney, medical power of attorney, and there was some other things I can't think of at the moment. But I want to say I paid around $2,000. What I did do is I talked to 3 different attorneys prior to signing up with someone to get them to do it for me, because I wanted to shop, and they're all over the place with prices, and every state is going to be specific. So one thing I will warn you, because I did have this in place before. However, I used the California attorney. I live in Louisiana. Different laws in Louisiana, just, from California. So someone recommended me that person, and yeah, I wasn't, yeah. So definitely go with someone in your state that's familiar with the laws in your state. Otherwise, you could pay all this money to have something set up that doesn't work the way you think it's going to work when you pass. And then you want to kind of like monitor it regularly. I would say at least annually, because things may change. You may feel differently about how you have it set up, and you may want to give X amount to somebody else now, or however you do it. Just monitor it annually once you have it set up. All right, so I have more info, and I go way deeper than what we talked about today in some of my offerings that I have on my education site. The Escaping the Rat Race Blueprint at the top left is a course that's way more in depth and will give you a framework on if you're currently experiencing a lack in your finances. So that's something to consider. But gotincomestreams.com is where you can find all that stuff at. If you have questions, let me know too. But go check it out for your check it out. Let me know if you have questions or whatever I can do for it to help you. With that being said, though, what questions y'all have? Let's go ahead and address that. And for y'all that came on late, basically I wasn't presenting today. I just found out 3 hours ago that somebody else couldn't do it that was supposed to do it. So I had to put something together real quick. So yeah, that's what you get. What we got, Ron? You look like you got a question.
What are the if you have a IRA, or excuse me, a retirement at your job 401k, what's the best Roth IRA to roll it into? I think you're talking about retirement, so I thought that'd be a good question to ask.
Hold up. Ask that question again. What's the best?
So if you have a 401k and you're trying, like, if you change jobs, what's in terms of retirement, is there a certain, like, where would you get your Roth IRA to roll the 401k into that people have used or you personally have used?
Okay, so I think I'm following you. All right, so you have a job. You no longer work there, so you have this retirement money that's sitting there. It could be a Roth or it could be a regular, traditional. It doesn't matter, but you have this money sitting. So you're asking where should you put it, or where could you put it?
Yeah, I'm saying how to getting it out of the 401k. Don't you have to transfer to a Roth IRA?
It doesn't have to be Roth. If you have Roth money, yes, you transfer it to a Roth IRA. But what I did was I took my money and I rolled it into, so my old job that I quit in December 2021, I took that money and rolled it into a Fidelity solo 401k. So I have a solo because I'm self-employed. So I rolled it into a solo 401k. The Roth portion that I had over there, I rolled in. It's a Roth solo 401k. But you can do whatever you want. You can take that money and roll it into a self-directed IRA. And there's no fees or penalties as long as it's a custodian to custodian rollover. So you're going from one custodian, whoever houses it right now at your job, to the next one. So you never touch the money. They send the money directly to that custodian. But you can do whatever you want. You can do a self-directed IRA. I have that, and I lend money with that to real estate investors just to diversify outside of the market. Well, I'm not 100% in the market. Now I control where the funds are going. I control the return, that kind of thing. That makes sense? Okay. So basically, you have options. You can either do Roth, a regular IRA, traditional IRA, or Roth IRA, self-directed IRA, self-directed Roth IRA, however you want to do it. You have options. What else? Leslie, what you got?
So I have a question about the estate planning. So I'm on the same page. I understand the importance of doing it. But I'm struggling with the scenario where like there are no dependents, like there are no people to like, there's not a clear, like, I'm just gonna leave all this stuff to my kids. So it's hard to kind of finish the research and pull all the information together to get the actual documents because I don't know who I'm leaving it to.
Okay. So that's going to take some soul searching from you. You know what I'm saying? Like, do you have a favorite charity? Do you have, do you have a family member that you really love? Like a niece and nephew?
In the family, but it's like, sometimes family be dysfunctional and they'll be on the same page. So it's hard.
Yeah. So I got you. So that's what's taking you so long to get started because you don't know who it's going to go to, basically. Yeah.
Exactly.
Well, in your case, I mean, something would have happened to you today, and then you just letting North Carolina figure it out. You're in North Carolina, right? I think. Atlanta, my bad. Yeah, you're just gonna let the judge in Atlanta figure it out. But yeah, it's totally up to you. You just gotta figure out, do some soul searching and figure out who you want that stuff to go to.
Giving
What
you
up,
my
Clay?
business there. You're welcome.
Yeah, this is something for Leslie also. One of the things you can do is if you have a family member that you really like, but you're just not sure that they're going to do the right thing, you can put little amendments in there stating that they have to take a financial literacy class, and here's the class that they have to attend and finish, and to show that it's been done and taken care of before they can even receive any kind of funds from you, from your estate or your trust. That's one thing, and you can also dole it out over time. You can say, put all these different types of safeguards in it. It doesn't have to be a one sum, sum all type thing. And also I'll hit you on probably not the chat, but I got a lawyer that you can call up over here in Atlanta, since I'm in Atlanta too, that's been doing trust for like 40 plus years.
Perfect.
Also, Susie Orman had a trust that was like a really good deal that came out. I don't know if she still does it, but she had a really good package you could get all together. It was really cheap. So you should look into that, a Susie Orman will and trust package.
Sorry, Ryan.
Make sure it's in the right state though. And then Tony,
Yeah.
I had Tony confused. Tony in North Carolina. That's my bad, Leslie. I was gonna say something, but I forgot what it was. Dang it. Oh, I have mine set up like that, Clay, where my kids don't get everything at once. It's 25, 30, and 35 when they hit those ages.
Yeah.
But like I said, you should review that at least annually to make sure that you still feel the same way of however you had it set up before, make sure you still feel that same way once you do have it set up.
Is it like a certain you should be like I guess a certain amount of assets that you should have before you create a trust, or it don't matter?
I'm not a state attorney. I would advise you talk to one of those to ask that question. I couldn't tell you, man. Just do you feel like you have a lot of assets? Do you have, it's I think it's a choice on you, but I'm sure there's a rule of thumb that they could probably tell you that because they do it every day,
Yeah, for me, it's price as well. Like, what is the cost of the thing that you're setting up? So, a trust will cost you a certain amount of money to set up and a certain amount of money to manage on a yearly basis. So if you feel like that number is prohibitive, then you might have a different, you might just go down the will route until you're comfortable with the amount you're earning, or the amount that the trust might be costing you over a period of time. If it's 800, 900 bucks up front, for argument's sake, I'm just pulled that number out of thin air. But if it's like 800-900 bucks up front, and you're like, hey, I ain't got 800 or 900 bucks to spend on this configuration right this minute, then put a plan together in your mind. What I did actually. It cost me nearly £1,000 British money to set up mine and to do all of the paperwork, because I had to get a notary and all of that kind of stuff. And what I did is I just said, right, I'm going to put 150 bucks, 100 bucks aside every month, and that's going to go in a little thing. And when I get to it, then I'm gonna do this thing. You know what I'm saying? So
Gotcha.
sometimes it's just about what the money that you have, and how much it's going to cost you. You might be really cheap in the state that you're at. You know what I'm saying? But I think if you've got any amount of assets, so you own one home, then I know the government ain't getting a single penny of my money unless I prescribe it to them. You know what I mean? Because they're not going to do nothing for me or my dependents or anyone I care about afterwards.
Would it be based off the state that you live in, or the state that your assets are in? Or does it matter?
My bad. I'm sorry. I got a text message. You said would it be on what?
So would the trust matter like based off the state that you live in, or the state where the assets are located at?
That's a good question for an estate attorney. Probably the state you live in.
Yeah.
Okay.
Would you say, Clay?
Oh no, I was agreeing with you. Probably the state you live in, but also I was going to bring up. I have somewhere I sat in on with a state planning attorney for seniors, and I took one of my the seniors in my community up to it so she could hear it. And I sat in there, and as I did, I recorded the whole thing on my phone. So maybe if I'll look for it, and if it's okay with the group, I can just drop it in, and people can just take a listen to get an idea of what you would be, some of the things you want to know for your state. Because apparently, what I didn't know is, depending on the estate planning attorney is going to know specific language to put into your trust that you may, unfortunately, Ron, I didn't know this before, that you can't, that could mess you up if you don't have that specific language put in there that you may get from like Susie Orman's course or whatever. I think Susie Orman's thing is a good way to get you to understand what's happening, but you really need, like you said, Antonio, to go to a state planning attorney inside of your state and have it everything done there.
100% agree. And I had like in my original one, I had some California language in there that doesn't even apply to Louisiana. I had a lot of stuff missing that's required here that wasn't in there. So yeah, you definitely want to go with somebody in your state to get that set up.
Gotcha.
There's another thing I had a question about, which is there's a lot of talk of 401ks and IRAs and everything, but you don't want to use it. I guess it's life insurance policy. Just stocking your money over in that life insurance policy is another vehicle that you can use outside of the 401k and so forth. From my understanding, it's not taxed or taxed the same. I don't believe it's taxed. I think it's just money that once you put in, it can earn money, blah, blah, blah. There's a lot of benefits to it. So you may want to speak to an insurance agent about putting your money over in life insurance policies as well. And you can have more than one.
Yeah, the guy did a presentation on it. I forget which one it was. It should be in the archives.
Yeah. You can get one for people too.
Yeah, this other thing. Yeah, I heard someone, she was doing it for her friends while they were in college. And she told her friends, like, I'll pay the premiums and everything. And if anything happens for your family, I'll take care of all the funeral expenses, plus give them a portion of the money. And then, of course, she gets the money that she paid in and anything after that. It's a little macabre, but, it's another way of doing it.
Yeah. Michelle, it's been a long time. Yeah, you're all right. That sounds like an IUL, index universal life. Michelle, where you been? It's been months, feel like.
I've been in and out, but I just got back into the country, so.
That's where you've been. All right. Cool. We missed you, girl. We missed you.
Thank you. Listen, hustling and bustling.
Yeah. Anybody else got any questions before we roll?
I do.
Yep. What's up?
So, great information about the estate, and the insurance. Just want to add a book by Sam Freeman. It's called "What Would the Rockefellers Do About Overflowing and Overfunding an Insurance Account with an Annuity or IUL or Whole Life." It's a good book to read to help you with, if you want to overfund, insurance. So my question is high earning. You are a high earner and you're using that money to fund your business because your business isn't there yet. Let's go ahead because I'm talking to third person and it's me. But I'm getting hit hard with the taxes. Like I can't, what should I do? Like I know you're not a CPA, but what other vehicles can I do? Because I still do need my gig to fund for my business. My business is not there yet that I can take this money away. But it's being taxed at a 32 percentile or 37%, I think. 2024 goes to a 37 percentile, but this year's 32% of my income will be taxed by the government because of no matter what.
Yeah.
So just
Well, two
looking
things.
for, go ahead.
Two things. First, congratulations because you're making a lot of money. Congratulations. Everybody,
Taking a
some
lot
people
of
wish they
money.
had your problems. You know?
Okay.
Secondly, yeah, you may just need to talk to somebody else, like a tax strategist, to
Yeah, I
help you.
have been. I have been. They was like, you either gonna pay it up front or you're gonna pay it in the end. Because he was saying set up some IRAs and stuff like that too. But you're still gonna pay for it when you come out of it. So I was like, okay.
Oh,
I just
Hell,
was,
He's the
do
wrong,
you
he's
have
the
an
wrong
accountant?
tax advisor.
you talking about this, right? This
yeah,
book?
what would the
Oh yeah, what the
Rockefellers do?
recommendation?
I know
Yeah,
I
good
had it.
job.
I was looking for it over there.
Good job. Yeah, that's the
Yeah,
good
he's
one for insurance. Go
Oh,
ahead,
do
I'm
you have an
listening.
accountant?
I'm sorry. I was gonna say he's the wrong type of tax advisor. You need to really speak to someone and share with them what your vision is, your plan is,
Okay.
and so
Yeah.
they can help you situate and make decisions so that you
Yeah.
can automatically write off but still show income. Because
Yeah.
basically, yeah. So you just need to
That's what I'm looking
find,
for, to be
yeah,
honest. Because I just like, this is crazy that, I can come up with stuff for the business, but this income, it's got to be offset somewhere to write these off for the business. Like,
So
mhm.
L,
I got it.
I got you, L. I got I got a financial advisor and I have a tax person.
I was
So
just, like, I kind of, I stalk you out sometimes on Telegram. I be like, Antonio, I asked Antonio several questions about
so
New Orleans. Okay,
so
I
my
appreciate you.
financial advisor, he not even here. He in Houston. He went to LSU with me. But he
Okay.
in his past life, he is a CPA, but he's not a practicing CPA. Like he doesn't do taxes and stuff like that. He just helps me navigate the whole finance. Like he's smart as hell when it comes to these finances. So I run things
Okay.
through him all the time. I'll put you in contact with him. He can help you for sure.
Appreciate that. Thank y'all
Yeah.
so much.
And I had put in the chat too, but one thing that I've been hearing people say when you're trying to reduce your taxable income is to
What's the
max
HSA?
right, max out the HSA, max out your IRA accounts. Now with the Roth, you'll pay the taxes today, but then you wouldn't pay it on the earnings for the Roth retirement account. So, but you could do you could put in traditional account now, and they have like a, what is it called, a ladder or something where you can like later down the line, you can move the funds from the traditional account to the Roth.
Okay.
So,
Yeah, I'm not a fan of the HSA. If you have health problems and all that stuff, but I got health care, so and you only get time limits, like you got to spend that within a certain time or
That's
they'll
an
take it away.
FSA. That's an FSA. An HSA is
So how
different.
long do you have to get to have for the money in the HSA?
HSA you can carry with you. You can take it
yeah,
anywhere
for
you want.
life.
And it acts like you're getting. You have to think about it like this. Think about every time you go to the doctor and you pay with your HSA. It's like getting a 10% discount
Okay.
because
I thought,
it's pre-tax money. So that
okay.
money.
And also,
And you can
Right.
start
And also with your HSA, once you get over to a certain dollar amount in your HSA account, you can actually invest that money.
right.
You
Yeah.
can make money with your HSA account.
Yeah.
Oh, I didn't know that.
Yeah.
But
I
your
do that all day.
YSA or FSA is the one that you lose after the end of the year or however they
Not
do it.
everything. Mm-hmm. Okay.
But remember, if you are using an FSA at a certain period, you can ask for that money back before you lose it.
For FSA?
Yeah.
No, you have to approve it. They taking it.
No,
Or
no, no. You can say,
Oh.
you can say you can put that money off, and then at the end of the right before it's done, I think you have 11 or 13 months while you're doing it, and you can fill out paperwork. Just talk to whoever's holding your FSA and ask how you can get that refunded back to you if you didn't use it.
So it looks like we need some research. Maybe we need to have somebody to come over here and
Yeah.
present on that,
Yeah.
If y'all know anybody, definitely let us know something. And then Al, I
Mhm.
wanted to tell you, you mentioned earlier, you said you're getting taxed on 37%. So it's not 37% of your entire income. But remember, it's marginalized, the tax system. So it's just
Mhm.
whatever that hold on, let me pull it up real quick. Let's do this.
And
Yeah,
while
it's
you're pulling that up, Antonio, do you have anyone that can teach on 1031 exchange?
Oh,
You say
I
no.
don't. I do not. I'm sorry.
And the man, you have anyone?
I might have someone, Antonio. Let me look into that and I can let you know. This is Tiffany.
That'd be great.
Uh-huh.
I literally just put a message in one of my group chats, so we'll see.
Let me zoom in right quick.
I follow what Antonio's saying. So he's saying that like if the bracket below yours was okay, yeah, they go to visual.
Yeah, this make it easier. So that's the updated tax bracket for
Mhm.
2024. So your income this year.
Mm-hmm.
You single or married?
I'm single.
All right. So you paying 10% on 11,600. So
No,
up to that
go
amount.
down to the 32%.
No, I know. I'm just saying how it works. So your 10% will be taxed
Okay, yeah.
up to that, and then
Yeah.
12% would be up to that amount. So basically,
Yeah.
like you would add all that up, and then you know how on your tax return they'll give you like your effective tax rate. That's because
Right.
they take all of this into consideration. Like you wouldn't be just paying, like if you make over that amount, you wouldn't be
No,
paying
I'm not making
37%.
over that amount. But I am in the 35 percentile.
Okay, so you wouldn't be paying 35% on 609. If you made 609,000, you wouldn't be paying 35%. It's marginalized. So like anything basically from 243, 726 to
Mm-hmm.
let's say you made 500,000. So from
Mhm.
243 to 726 to 500,000, you'll be paying 35% tax on that amount of money.
Okay.
It goes up, and like you get what I'm saying? I don't know if I'm explaining it good enough, but you
I'm
follow
gonna
me?
ask about it when I talk to the CPA. I'm gonna ask about it because that dollar amount, I mean, that percentage just was like, what? This is not fair. Just
Yeah,
because
you're
you're
paying
making
the
more
high
money.
end tax rate on the biggest amount, so the
Yeah.
top end. But
Check me out real
the
quick. I think
effective tax rate is the best example.
so like if
Okay.
let's say you make $101,000 a year.
Yeah.
So you will only be paying 24% on, let's see, 526 minus what I said, 101. So you'll be paying whatever the difference is, $474. So you'll be paying 24% on that $474, which is 101
Mhm.
minus this amount. So whatever is in that little bracket is what you're paying on that tax. That makes sense.
Mm-hmm.
So you will be paying 22% from the amount from this amount through this amount. Whatever that is, you'll be paying 22% tax on that. And it keeps stepping up. If you make more money, you get into the next tax bracket. And that's how they calculate the tax. And then it's just the effective rate is when they give you like how much you're paying when you consider everything, like all the lower levels as well. Does that make sense?
I'm still a little lost.
So if you made
L, you're not paying the 35% on every dollar you earn. You only
correct.
paying that on the amount that is in that bracket, in that range. Everything below that range, you're paying a lower percentage.
So you're saying for like 10 months, if I made below 243, then I'll be in 32 percentile.
No,
But once
it's not time. This is based off the amount. So if you made $10,000 in one day, then you're gonna have to pay that 10%. It's levels. So each level, once you go higher, the more money you make, the more tax you got to spend on that level. So you see how it has it like from 11,000 and less, that's 10%. So once you go over the 11,000, then you got to do 12% on 11,000. $1 over, it's gonna be 12%, and then that bracket is gonna be taxed at that amount. And you keep on going up, you're gonna keep on getting taxed at a different amount. So you're not taxed at the whole thing at one time.
Okay, so then you graduating it up
Correct.
as I receive a paycheck. So my paychecks will start with below 10,000, and then by end of the year, then I'll be at 35%.
Exactly.
I guess you could look at it like that by paycheck, but really it's just whatever your sum is. So you're paying it
It's
all.
the total at the end. It's the total at the end of the year. But I'll give you hopefully maybe a better example from the weird UK tax system, which is we have an allowance of 12,000. So if see this number on the screen that Antonio's got 11,600.
Yeah.
In the UK, we don't pay any tax on 11,600. So as an example, just to hopefully make it a little bit more simple to understand, if you earned under 11,600 in the UK, you'd pay 0 tax. If you earn 12,000, you would pay 10% on the $400. So it's incremental. So as an example, with Antonio saying $500,000, forget everything under 243,000 because you're paying different amounts of tax. You're going to pay the 35 on the 250,000 between 243 and 500.
Yeah.
So you are paying on the biggest amount, you're going to pay the highest amount of tax because it's at the top end of the bracket. But it's an incremental. You said exactly the right thing. It's an incremental a tax bracket. So as you earn more, you'll pay a little bit more on each section as you earn more. When you add it all up together, your effective tax rate is the total amount you've earned and then the total amount of tax you paid, the percentage of the total amount you earned.
Y'all just told me a whole bunch because I was like, what in the blazing saddles of that amount? But it's still high. Like I'm still trying to figure out.
I mean, your point is still relevant, by the way. Like, how do I pay less than it?
No, I appreciate everything and everybody explaining that to me because I did not know that. So yeah, that was very informative and educational. Truly appreciate that, y'all.
I was over here trying to put together.
Yeah, we get penalized for being single with no children.
And it ain't even the part of no children.
Money.
You don't have no more dependents, and you are supposed to be a high earner. Like you shouldn't be making $12 an hour. It's disrespectful. So, but you get penalized for being an employee. That's the God's honest truth in the United States. You want to be a business owner.
I was sitting over here trying to calculate it for you, like so I could show you how much your tax.
I figured it out. I understood it now. So as I grow throughout the year, that's the tax bracket. And then once I get to it's incremental.
Correct.
Yeah, you'll make more and then you might move up into the top tax bracket, but not on everything that you made previously, just on that little bit that you made above the tax bracket.
But then, okay, I know you're like this lady. I know.
No, I'm here for it. I'm here for questions.
Okay. So what if you're double dipping? Because that's I gotta bring my money up, right? So now
if you're doing two jobs or whatever, it ain't gonna make no difference because the IRS sees all that money.
Yep.
Right, but one of them is a 1099. One of them is a W-2. So in the U.S., you pay your own taxes on the 1099. Am I going to just automatically take that 25-30% off? Because that's what I've been doing on the 1099 job, just to cover taxes, because that's usually the tax rate.
I'm gonna allow people who know way more than me about the American tax system talk for a second, but I'm gonna just say this: that the IRS knows every single dollar you make because it's all being declared. Right. Unless you're a business owner or unless you're self-employed, all your money is being declared by your employer. So you need to look at the total amount of money that you make over both jobs for the year, your expected amount. So you can't say just because this job paid me 100,000. I'm gonna take 30% of that 100,000 and I'm gonna put it aside, because if you make 400,000 in the other job, then you're gonna exceed you're gonna way over that 243,000. So for me, I wouldn't say, oh, this job is paying me this much and this job is paying me this much. I would classify them as one when it comes to earnings, as income, as one set of earnings, and then that way. The truth of the matter is, if you budget over, as long as obviously you're not in a financial quandary, as long as if you budget slightly over for the amount of money that you're going to pay in terms of tax, you got a little bit of money in your pocket. You know what I'm saying? So better to be over than under. You know, you don't want the IRS to be like, yo, you owe us this, and you're like, I ain't got it. You know what I mean? That's a problem.
Okay.
Well,
Thanks so
you got to
much.
also think too with the
Yeah.
1099 it depends on what kind of 1099 you have, right? So
Mhm.
it's gonna be totally taxed differently than your job. I can tell you that for
It's
sure. So
it's
your
not
W
taxed
two is
at
gonna
all.
be, yeah. Well, I'm saying when you're paying when you have to file your taxes, when our
Yes,
businesses have
ma'am.
to file our taxes, that
Yes.
percentage is that's going to be different than your W-2. Because depending on what kind of 1099 you have, meaning what kind of business setup you have, is going to determine how all that gets handled. So you definitely need to get to a CPA, a tax
Okay.
advisor,
sure.
and a financial advisor.
Will do. I'm just trying to figure this out, and grow my money. And then once I get my money up, then I can start investing more. I got rental property, but I want to do some different things this year. And I want to be able to leverage the real estate over my income, but still keep the income until real estate replaces it. And I don't see that for a minute yet, because the income is good and I can't double dip right now. So
Look, I know y'all got it, but I've been putting this Excel thing together, so I gotta share it. So look,
appreciate you.
Make the font bigger at least. Damn.
so look, if it was somebody making 101,000 based on
Yep.
the individual single, like in your case, so the first 11,600 will be taxed at 10%. So that's
Yep.
what the tax is.
Okay.
This right here, the next 35,549, which is the difference between these two numbers, will be
Yeah.
taxed at 12%. So that will be the tax for that amount.
Okay.
Then the difference between these numbers is the 53,000. So the next 53,374 will be taxed at that amount. And then the additional, this a person making 101. So the additional $474 will be taxed at 24%. So then you add all that together and they will pay $17,281.92 in taxes based on 101,000.
Hey,
As
All right, I need
opposed,
to do this for the two jobs.
do the column that says divide 281.92 divided by 101 to do the effective rate.
okay, as opposed to like if you made 101,000, you just paid 24%. That's how much you would pay, 24,000.
Yeah.
So that's why it doesn't, add up or whatever.
Okay. I
So then
appreciate that.
yep. Oh
The
man,
other, if it's the other dash, the other way. Yeah.
So the effective tax rate is 17% in this
17.1.
case,
Yeah.
in this example.
Okay. Thank y'all so much. Appreciate all that.
You bet. Keep
Great
double
job,
dipping. Make that
Antonio.
money.
We just
I'm
get a
working
tax.
on it.
Antonio,
And we not
Antonio,
tax advisors.
Appreciate y'all.
Antonio, I got a question.
Yeah.
You, when you pay yourself an income, how do you do it? Weekly? Because you said you have an S-Corp, which I have. But how do you pay yourself an income, especially like if it's on commission, and how do you adjust for that within the?
AC about to press stop recording 1 second.
Nah, this legal. I pay myself monthly from an S-Corp, and I just have a set salary for the year.
Gotcha.
And as far as the amount of salary, you're gonna talk to your tax person about that. It just depends on how much you net. A lot of people say you don't need an S-Corp unless you make 40,000 in net income a year. Some say 50,000. Just depends on the tax person, whoever you're getting your guidance from. But
Gotcha.
I just have a salary that I pay myself through with QuickBooks payroll, and it's just every month.
Got it. And that's separate from your profit. So you pay yourself an income and then you use your profit for something else. But
profit will be dividend or something as well.
Right, but with your profit first model, where does your income fit in? That's just considered expenses?
No, it's income. So what you mean?
You talking about we did
the part in your
Sales
chart.
minus profit equals expenses. JP saying, is it an expense or a profit? For me, it's an expense.
Expense, right? Is it your salary?
Because it's an operating cost of the business.
Right, and so you put your income after your profit.
Gotcha. Only if you. I would only do that if I understand. I've not read that book, by the way, but I would understand it as profit first means profit from the business first, right?
Right.
But you might then pay elements of that profit to yourself as a dividend or in other ways that you do it. Do you get what I'm saying? Whereas a wage may not. I mean, a lot of people, certainly self-employed, certainly in where I live, they'll bring their wage down to the minimum amount. Do you know what I mean?
Right.
Just so they're taking a small wage, and then the majority of the money that they pay themselves will be paid out of dividend. So because it's easier to manage, right? So even if you classify wage as an expense, it will probably be a small amount, if you know what I'm saying. And the majority of the money that you pay yourself will come out of profit.
Gotcha.
So
That's the
you
way
were
I look at
asking,
it.
where did my salary come from? So I'm paid out of here. My salary comes out of my operating expenses.
Got it.
This money over here, the profit, that's all that goes straight to investing, things, vacations, things I want to do.
Gotcha.
But taxes. So the cool thing about this, when I started doing this, I want to say it was 2020. But one of those years, 2022 maybe, or 2021, I don't remember. But
Was
one
you
of
allowed
those years,
outside?
huh?
Was you allowed outside at the time? Then you'll know.
Oh, I don't remember. But I'm just saying when it came down to paying it, like I had a large tax bill. And I wasn't tripping because I had the money set aside already in the taxes account. So I just wrote the check. Like it was a big check too. I was like, okay, like this how it really works. Like I had the
Yeah.
money set aside. So I wasn't like, just think of the average business owner, like they don't put money aside for taxes when you have to pay them yourself. So then you're scrambling when it's tax time, you got to go on a payment plan or something like that. Like I wasn't tripping. So that's the beauty of this system. Like it really works. But this is just my percentages. Like read the book and figure out what works for you and do what works for you in your situation. Don't copy this because I ain't start here.
Yeah, you gotta start.
Want to, huh?
You gotta start little by little. Like I started right now, I do 5% of a
Yeah.
profit. So eventually, hopefully, I get to 30%. But I've read the book as well. But I'm just starting, so it does work taxes wise. Like at the end of the year, you will have money for taxes. Like no question about it.
I'm going to read
Exactly.
that
It's better
book.
you have the money put aside and you don't get caught by the IRS. You know what I'm saying?